How are you doing, Incog family? I hope everyone had a really good Christmas, and I just wanted to wish each and every one of you guys a happy new year. And yeah, I just wanted to say a huge thank you to everyone that supports this channel. Started it last year, and the growth has been, unreal. I didn't expect it, so thank you so much for the support, and I hope it continues throughout 2023. So hope you guys took some time away to spend with family, to reflect, so on and so forth. And I hope all your goals, all the things you want to achieve, it's all set out, all lined up, and you guys have a plan. Yeah, make sure you're going into this new year with a clear-cut plan. Yeah. So yeah, I hope everyone is excited and ready to go. Today's little video, I thought we'd go back in time and do a little recap on structure. I just believe, or I firmly believe that, sticking to the basics and always recapping the basics is a really powerful tool. It keeps you humble as well. It keeps you really grounded, and I think it's just reiterating those basics that form your trading plan. It's very, very important, right? So as regarding structure, I'm not going to keep it too long. Yeah, so let's just get started. So when we speak about market structure, what we need to sort of identify is, the markets can only really do three things or move in three directions. It's uptrend, when price is making a series of high highs and high lows, or it's in a downtrend when price is making a series of low lows and low highs, or it's consolidating, right? Range in market conditions, whatever you want to call it, it's all good, right? It's essentially just moving sideways. Yeah. So let's just pick this little example here. Let's just focus on this little one here. So the market here in this instance is clearly breaking highs. It's breaking highs here. Yeah. Now this order flow, it doesn't always need to continue like this. I'm sure everyone is aware of that. Yeah. We don't always get really beautiful order flow like this. What you then, often get is a break to the downside like this. Yeah, it's a break to the downside like this. Now, the reason I'm actually doing this is because I've seen EU basically do this in recent sort of times, and I thought, it's a good time to sort of have a look at this basically. So in this instance, what's actually happened is, from a swing standpoint, we've seen a break in market structure. Yeah, which is completely fine. However, what we need to identify or understand is this single break in market structure can simply just be intention to continue bearish, right? With the important word there being intention, right? It doesn't need to be confirmation, or this single break is not giving us confirmation that the market has broken to the downside, or it's not broken to the downside. It has broken to the downside, that the market is going to continue to the downside. Yeah, this could simply, right? This could simply be a sweep of these lows, right? A sweep of these lows into, let's say, a POI in here, in order for price to continue that bullish order flow. Yeah. So what I always say is, if you see one break, that's essentially intention. Yeah. And if you see a pullback, and then if you see a second break, at that point we can basically say, when we get this second break in market structure, we can say that, right, there has now been confirmation that the bullish order flow is in play here. Sorry, the bearish order flow is in play here. Yeah. So a single break, intention, double break, confirmation. Yeah. Now, even though after the single break, you can still look to buy, look to sell, all of that, that's completely fine. Yeah, there's nothing wrong with that. I'm just saying, speaking from a pure structural standpoint. Yeah. Because often what we will see is, we'll see the single break. People will literally be loading up on their sells. You'll likely get a reaction for prices continue higher. Yeah. So this was simply just a liquidity grab. So let's look at an example of EU presenting this exact same scenario in recent times. So let's have a look at this example here on the 30 minutes. And remember guys, time frames, like irrespective of what time frame you're using for your structure, this applies. Yeah. So we'll basically be looking at this whole picture in here. Yeah. Cool. So let's start to the left. Like I said, I don't want to spend too long on this. Just want to show you guys literally the example that I drew out there on the diagrams. So what we have here is a high, which pulled back, put in this low, and then broke structure to put in this high. So what I mean by that is we had broken this previous swing high, broke structure, put in a new high. Yeah. What do we expect from here? We expect a pullback, which we get, and we expect a higher high. However, we end up with this. This is what we refer to as a failed high. So price fails to put in a new high, and in fact puts in a new low. Right? Puts in a new lower low. So what's happening here is a lot of people are seeing this breaking market structure, which is fine. It is a breaking market structure. And we can see clearly at this point, and more so at this point, people are loading in their sell positions. Yeah. Now, I'm not saying there's anything wrong with that. There's absolutely nothing wrong with that, if I'm being brutally honest. Yeah. What I am saying is, you cannot lose track of the fact that this here is a single breaking market structure. It's just a single breaking market structure, right? So that's just intention. That's just intention. And what did price do? Price pulls back, and we do get a reaction, but then we go ahead and break structure to the upside. We go ahead and break structure to the upside, like so. So we get a breaking market structure here. Yeah. So now we're back to high low formation, right? So this is why these little single breaks, it can often put people off. Yeah. Because this was simply just a liquidity grab of these lows, right, of this trendline liquidity for price to go higher. And then what do we have after that? We have a pullback, impulse, and literally this is really, really clear bullish order flow, right? What do we see? We have a pullback, impulse, we then pull back, impulse, we then pull back, and then impulse again. And we're basically right now, as I'm recording this, we're in a pullback phase of the market, right? I'll just put that out there. I'll just draw these just to be clear. So impulse correction, impulse correction, impulse correction, just really strong bullish order flow. Yeah. So the important thing to basically take away from this video is, when you see this single breaking market structure, be aware of the fact that it is only just a single breaking market structure. Yeah. So for me, a single break, like I mentioned, is intention. A double break is confirmation. Yeah, irrespective of time frame. So you might be using the H1 for your structure, you might be using the H4, whatever it is you're using, you might be using 30 minutes, whatever it is you're using. Yeah. A single break, intention, double break, confirmation. Yeah. So like I say, guys, it's always good to recap on these basic concepts. And yeah, so that is pretty much it for me today. If you guys have any questions regarding this, just let me know. And until next time, trade safe.